Welcome back to the crypto world. My name is Josh, and in this video, I'll be going over some brand new Ethereum price targets and my Ethereum strategy moving forward. But that is not all. A lot of you have been leaving your altcoin suggestions in the comment section down below. So later in the video, once again, I'll be going over your most suggested altcoins. So that will cover Cardano. I'll also be covering Algorand, and also I will be giving you guys another update on Solana. I'm just going to be spending a few minutes on each one to keep it quick, let you guys know the important stuff that you need to know. And so if all of that sounds good to you, just before we jump into it, make sure to drop a like on the video down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more videos like this one. It only takes a couple seconds out of your day to click like and subscribe down below. And obviously it costs you nothing, but it seriously helps out the channel so much. And I really do appreciate all of your support. But anyway, with all of that out of the way, let's get straight into what this video is about. So right here, we're on the Ethereum to US dollar chart on the 4-hour time frame. And as I covered in my previous Ethereum update videos, we did actually see this week come back down and retest this 50-day EMA, which historically speaking is a really important moving average for Ethereum. But for the brand new viewers on the channel that have not seen my last Ethereum update videos, definitely go on my channel and take a look at my Ethereum update that I posted yesterday after you finish watching this video, because in that video yesterday, I actually had a deeper dive into the 50-day EMA and what it actually means for Ethereum. But I'm not going to repeat the same things over and over for the subscribers out there. And other than the 50-day EMA, we've also got this previous support line acting as support right now for Ethereum, as you can see. Now, we could probably get rid of this previous resistance line because right now the Ethereum price isn't really respecting this line. So yeah, we'll just go ahead and get rid of that, considering the fact that that previous triangle pattern already played out to the upside. So obviously this line of support is still intact. We have seen multiple bounces along this line of support, and right now this is coming in at around 3,250, give or take. And it's actually really important that we hold above that level, because if we don't, as you can see, we could potentially be forming a head and shoulders pattern. We've already seen the left shoulder back here. We've already seen the head, and right now we're just waiting for some sort of right shoulder to actually form to complete a potential head and shoulders pattern. Now, once again, these patterns are not confirmed until we see the full head and shoulders actually complete and a break of the neckline. Once we see the right shoulder and a break of the neckline, that is how you know that the price target for the pattern will come into play. But obviously from where we are right now, there's actually no guarantee of that right shoulder forming and breaking that neckline just there. And in fact, over the last 2 days for Ethereum, ever since that initial crash just there, I immediately let you guys know after that crash that we're likely to enter some sort of sideways consolidation for Ethereum. And we've pretty much seen that. We've actually seen a bit more of a bounce in Ethereum compared to Bitcoin. And that was also because we reached these oversold areas in the RSI on the 4-hour chart, as you can see. But right now, when you're bringing out the Fibonacci retracement tool from this high at around 4,030 down to the recent low at around 3,000, we're currently finding the 50% retracement level for Ethereum, and anything higher than that, of course, we have the golden pocket, one of the most important Fibonacci levels, coming in at roughly around 3.6k, just above 3.6k. And of course, that's when you're drawing the fibs from the high to the wick low just here. But when you're drawing the fibs from the same high but down to this low just here at around 3.2k, obviously that gives us some slightly different levels to pay attention to. So for example, the golden pocket is coming in at around 3.7k. So basically in between 3.6 and 3.7 thousand US dollars, that will provide a decent amount of resistance there in the short term for Ethereum. So if we do continue in this bounce to the upside, I would expect some sort of turnaround sometime soon to actually come and form another low. Now, whether that's going to be a higher low or a lower low, obviously it is very hard to tell at this stage in the market, because we do have this ascending line of support suggesting that the next low could be a higher low. But obviously if we're breaking that line, in that case, then we are flipping even more bearish just in the short term, because then we'll have to look at the potential price target out of that head and shoulders pattern, which, by the way, the technical price target, if that ends up forming, is coming in at around 2,400 US dollars. And there's really something interesting about 2.4k, because that comes into contact with this exact line just here. You might be wondering, what is that line? Well, if I zoom all the way out to the daily chart for Ethereum, as you can see, that is Ethereum's year-long trend line, or even longer than a year. Ever since around March 2020, we've been bouncing along this massive trend line on the logarithmic chart, even in this huge correction to the downside. Once again, we hit this yearly trend line for Ethereum. So a break of this head and shoulders to the downside would potentially give the Ethereum price a retest of this huge trend line. And something also interesting about those sort of levels just there, if we're bringing out the Fibonacci retracement tool from this low at around 1700 1,500 to the recent high just above 4,000. As you can see, we've actually got the golden pocket for Ethereum coming in at around 2.6K. So pretty close to the technical price target out of that head and shoulders pattern that we are potentially forming. But once again, none of those lower price targets are confirmed whatsoever, while we are still above this support line just here, and especially above the 50-day EMA. It's only if we start breaking below these important support lines just here, and this 50-day EMA in particular, that's when we're going to flip much more bearish, and we have to consider those lower price targets towards around 2,500, give or take. And by the way, right now, the 50-day EMA is currently coming in at around 3.1, nearly 3.2 thousand US dollars. Now getting into the Cardano analysis for today. This is the Cardano to US dollar chart on the 4-hour time frame. And first of all, just quickly recapping this crash that we saw, because I haven't really made a Cardano video since just before the crash. And of course, if you were subscribed to this channel just before the crash, in fact, 2 days leading up to the crash, I was letting you guys know that we were potentially breaking to the downside here out of this bearish rising wedge pattern. And in that case, the technical price target is coming in at around $2 per Cardano. And as you can see, we actually met that exact technical price target with just a quick wick to the downside. And then obviously we immediately shot back up. And right now we're finding support along that same 50-day EMA, just like a lot of altcoins out there, and even Bitcoin as well. Right now, this 50-day EMA is currently coming in at around $2.24, but once again, it is rising over time. Now, I must admit, the daily chart for Cardano actually doesn't look too good, because as you can see here, I've just brought out the parabolic stop and reverse indicator. That's what all of these dots are on the chart for Cardano, and obviously the RSI down the bottom here. And just before we get into the parabolic stop and reverse indicator, straight away looking at the RSI, as you can see, we are in quite a strong downtrend in the daily RSI. Now, just because we're in a daily downtrend on the RSI, that doesn't necessarily mean that we're going to have a lot of bearish price action to the downside. This can also mean that we could be about to enter much more of a sideways consolidation, because as you can see further back here in the charts, looking in around February and March, we actually saw a major downtrend in the RSI for Cardano on this daily time frame right after this huge bullish movement. And what came next wasn't really overly bearish price action. It was just a massive sideways consolidation in this huge sideways range. Now, in other times, this can lead into bearish price action. As you can see, looking back in around July 2020, we had a major downtrend forming in the daily RSI for Cardano, while the price was actually still heading to the upside. And what came next was actually quite a decent bit of bearish price action over the next 1 to 2 months or so, before we then actually had some more sideways consolidation. And then we finally entered into the bullish mode again as the RSI entered into a new uptrend on the daily time frame. So once again, a downtrend in the daily RSI doesn't necessarily mean that we're due for some major bearish price action. It just means that we're not really going to be overly bullish anytime soon, at least just on the daily time frame. Obviously, if you're zooming into like the 1-hour chart, then yeah, we can have these bullish movements on the smaller time frames. But obviously, when you're zooming all the way out on the daily chart, those bullish movements aren't as significant compared to these huge bullish movements on the daily chart. And now getting into the parabolic stop and reverse indicator, as you can see, for the last 4 days, we've actually flashed red dots here on the daily time frame, which is actually a bearish sign. And what's interesting is we actually flashed that first red dot just before the crash, on the day before we saw the crash. Now, every now and again, we might get, one random red dot here and there, as you can see. But after we have a few days of bearish price action and we actually have a few red dots in a row, usually that actually lasts for a while, unfortunately for Cardano, because as you can see here, for example, the last time that we started seeing some red dots show up on the Cardano US dollar chart on the daily time frame in the parabolic stop and reverse indicator, those red dots lasted from around the middle of May all the way to the end of July, so quite some time. And it was only after the price began breaking back above the red dots just here to actually flip these dots into the green dots. And as you can see, as soon as we did that, that's when we confirmed this huge bullish movement that came next for Cardano. And of course, also looking at the green dots, they stayed green for quite some time. So this parabolic stop and reverse indicator is a pretty good indicator to show us the major trends in the market. And we have to be real here, this does suggest potentially a short-term downtrend. Now, once again, keep in mind that this can be just a sideways consolidation that we could be in for Cardano for quite a while, because we did actually see quite a lot of red dots in the middle of those sideways consolidations. But while we're still above the 50-day EMA, there is still hope for Cardano. And obviously on the 12th of September, in just a few days from now, Cardano is meant to have its upgrade to get smart contracts in just a few days once again. And obviously that is very bullish fundamentally fundamentally speaking for Cardano, but sometimes with those sort of upgrades, we might not have an immediate reaction in the price, but over the longer term, that is actually very bullish. So when you're talking about months and years from now, I am actually still really bullish on Cardano in the longer term. This bearish price action is just in the shorter term, talking about a time frame of kind of a couple weeks, maybe a couple months, that sort of time frame. Now getting into the Algorand charts, this is actually one of your most suggested altcoins in the comment section of my last video, which is why I am including it in this video. Now, as I said in the intro of this video, I'm just going to quickly go over the technical analysis for these altcoins. But if you're wanting to invest in any altcoin, you should always do your own research before you put your money in that altcoin, because seriously, you should know what you're actually investing in before you invest in it, and don't let a move like this actually rush you into an investment without doing the research, because that is seriously one of the most common ways that the beginners lose money when they're entering into crypto. Now, with that disclaimer out of the way, first of all, it's really interesting that Algorand is actually respecting this 50-day EMA as well. As you can see, when we were below it, we were finding strong resistance along this exact exponential moving average, and the moment that we broke above it, we actually tested it multiple times perfectly before we obviously began to explode to the upside over the past few days. Now, if you're zooming out and looking at the big picture for Algorand, as you can see here, the price actually moves in these very nice U formations, these very nice curves in the price, and so far, ever since around the beginning of 2020, these moves to the upside and also these lows have been higher than the last. So Algorand is still in its growth phase, looking at the big picture here, and now seeing how high we could actually go on this single pump that we're seeing right now. Well, first of all, bringing out the Fibonacci retracement tool from this first high that we saw in around February 2020 down to that immediate next low during March 2020, and bringing it out here, as you can see, the very next high after the next huge pump in the Algorand price came right into contact with the 1618 Fibonacci level, which at that stage was at around 74 US cents. And then we saw a perfect rejection from the 1618 straight to the downside. And that next major correction to the downside actually came into contact with the 78.6% Fibonacci level. We actually dipped slightly below it. And once again, when we were below the 50-day EMA back then, we were finding strong resistance. And then the moment we broke above it, that flipped into support and we began exploding to the upside. So seriously, the break above the 50-day is basically the signal to enter into Algorand at this stage, because we've also seen that this time round as well, this current cycle. But first of all, let's actually measure out the Fibonacci retracement tool from that high that we saw back in August 2020 down to that low that we saw in around November 2020. As you can see, we actually got stopped out the next time round at the 2618 Fibonacci level. So once again, the first time round, we got stopped out at the 1618. The second time round, we got stopped out at the 2618. And then the moment we broke below the 50-day EMA, that's when the bearish price action was confirmed for Algorand, and we actually came straight into the golden pocket to find strong support for Algorand initially, but we actually dipped a little bit below it later on, as you can see. And then the moment we broke back above the 50-day EMA in the beginning of August, that was the signal to actually enter into Algorand. And bringing out the Fibonacci retracement tool from this previous high down to this swing low, as you can see, we're actually getting very close to the 1618 Fibonacci level. That's coming in at around $2.60. So we could potentially find some major resistance pretty soon for Algorand if we do get rejected at that initial level just there, like what we saw the first time round. But looking at the 2618 Fibonacci level, because that's where we got stopped out last time, that's actually coming in at around $3.78, pretty much $3.80. And from the current price, that is still another 57% gain for Algorand. And somehow, if we make it past that level just there, of course, we have the 3618 Fibonacci level coming in at pretty much exactly $5. I would actually not expect Algorand to go any higher than $5 on this move. Honestly, it's probably more likely that would be stopped out before $5, sometime at those lower regions just there, before the next major cool off in the Algorand price, like what we've seen time and time again throughout its history. If you're entering right now, the actual upside potential is very limited because we've already seen this huge bullish movement in the market, and the downside risk from where we are right now is actually probably more than the upside potential. So right now, it would not make too much sense to go heavy into Algorand, at least as part of my strategy. Of course, do whatever you want to do at your own risk, but I certainly would not be buying at these prices. I'll be waiting for the next cool off, and especially if we can come back and and retest the 50-day EMA, which right now that's coming in at around $1.15. Now, finally getting into the Solana chart. This is one of your most suggested altcoins as well in the comment section down below. This is on the Solana to US dollar chart on the daily time frame, and as you can see here, the price has gone absolutely crazy over the last 1 to 2 months, ever since this low that we saw on around the 20th of July, which by the way, that was only about 7 weeks ago, just over 7 weeks ago now, all the way up to the recent high in Solana. As you can see, in just 51 days, Solana has had an 877% gain in only about 1.5 months. So once again, those are some crazy gains for Solana. And in fact, if you're looking at the chart alone, just the technical analysis, that actually doesn't really make too much sense without a pullback. But of course, there's many other factors that impact the price of a crypto, not just the technicals. For example, the actual fundamentals of an altcoin is one of the other major factors that can drive up the price. And that's largely what we're seeing right now in Solana, because of course, the Solana ecosystem right now is actually booming. Because right now, Solana has pretty much everything that Ethereum has and more. Seriously, Solana already has proof of stake when Ethereum is trying to achieve proof of stake. Solana already has smart contracts, which is what Cardano is trying to achieve in only a few days from now. And obviously, Solana transactions are faster and a lot cheaper than Ethereum transactions, making applications built on top of Solana, such as NFTs or decentralized exchanges, for example, a lot more efficient compared to the Ethereum competitors. So once again, it's because of those fundamental reasons in Solana and the huge boom in Solana's ecosystem. That is why we've seen a huge boom in the price as well. And also more recently, there's probably a lot of FOMO happening in Solana right now, which is obviously also helping drive up the price. Now, when you're zooming into the 4-hour chart for Solana, we are indeed seeing a bearish divergence. As you can see, we've seen a higher high in the price, but a lower high in the RSI. So once again, that is a bearish divergence. That just basically means that in the immediate short term, the bulls are running out of steam, and we're due for at least a short-term cool-off for Solana. And as well, having the volume drop off here to the downside while we are making a higher high, that is also a bearish sign for Solana, because that actually shows that there's more volume at these lower prices, but there's not too many people interested at these higher prices with this reduced volume once again. And as you can see here, we've actually perfectly run into this resistance line time and time again for Solana. And right now that's coming in at around $225, give or take, but obviously it's ascending to the upside. But when you're drawing out a support line from the bottom of this wick that we saw a couple of days ago here, that was the crash, by the way, for the entire crypto market. Solana pretty much immediately recovered after that crash, as you can see. But anyway, bringing out the support line to actually connect some lines of support just here, we are potentially forming just a small rising wedge pattern on the 4-hour time frame. And so if we do see a break to the downside here further, the technical price target is pretty much right here at these support levels, and that is at around $135. So that would be a potential dip of around 30%, give or take, which of course, if you're looking on the big picture for Solana, that is actually nothing compared to the gains that we've seen. And also, if you want to get extra updates throughout the day in real time with no delay, definitely check out my Twitter. The link to my Twitter is in the description down below. And if you enjoyed this video or got something valuable out of this video, make sure to leave a like down below. And if you're new to the channel, be sure to subscribe with notifications turned on so that you're not missing out on any of these future videos. And as always, I really do appreciate all of your support on the channel at the moment. I can't thank you guys enough. But anyway, that's just about everything I have to say for this video. Once again, I really hope you enjoyed, and I'll see you all in the next video.